All right, now we're talking back in business here once again. Hope you guys had a fantastic day out there, but I think it's time to get back to work tonight. It is Wednesday evening after all. It's February the 10th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background. As you can see, got the E-minis, we got the oil, and we get the gold on our radar for tomorrow. Speaking of tomorrow, lots of momentum moves in the markets, right? Big momentum move on the S&P today. Oil rotating off the high, gold rotating off the high. Lots of momentum plays, and we'll talk about how momentum will play into my favorite setups for tomorrow's trading session. Now, before we jump in, though, and get this party started tonight, I just want to make sure to remind you, we publish this video newsletter every evening, Monday through Thursday, with my best trade ideas for the following day. I don't want you to miss tomorrow night's video newsletter, so make sure you subscribe to our YouTube channel. And when you do, hit that little bell icon. That way you always get notified every time I publish the next video newsletter. And don't forget, if you guys have any questions, you can always drop those questions in the comments section. I would love to answer all your questions once we finish up with this video tonight. So drop those questions in if you got them. And I really appreciate you guys tuning in every evening, carving out some time with me on this video newsletter. If you enjoy this video as much as I enjoy making it every evening, do me a big favor, hit that thumbs up button for me, hit that like button here for us. Always appreciate you guys carving out some time with us every evening on this video newsletter. So once again, make sure you subscribe, hit that little icon to always get notified every time we publish a video, and hit that like button if you guys like the video tonight. But enough of the introduction though, time is ticking. Let's take a look at the charts as we go into Thursday's trading session. Now, like I mentioned earlier, lots of momentum moves on the charts, right? Big move down on the S&P, big move up, and then maybe back down on the crude and the gold. We're going to kick off tonight's session, though, on the S&P. The S&P, of course, man, what a bloodbath move that was, right? What a huge move down. They took out the weekend gap, and now those buyers are slowly starting to climb their way higher, right? The buyers would love to get a retest of these highs, right? Buyers would love to get that retest of these highs, but there are two big problems standing in the way of the buyers, right? Two big problems. One is momentum, and one is the amount of space. Two big problems, and we'll talk about why those problems are important and how I'm going to use those problems to my advantage in tomorrow's trading session. So we'll definitely dig into the S&P here. Again, buyers would love to retest those highs, but we got two big issues we got to overcome for tomorrow. I'm going to go into more detail in tonight's video. Over on the oil, right in the middle. Now, oil and gold are very similar. You'll notice they've got ranges right in the middle, and you'll notice we've got that momentum up and coming back down, up and coming back down. Now, the buyers have overall control of the oil and the gold, but as you can imagine, though, there's a good chance this pendulum swings all the way back down. I've got my eyes on some nice deep pullbacks on the gold, on the crude oil. So I'd love to buy some nice deep pullbacks on the oil and the gold tomorrow. And I'll be honest, I'm also looking for possible short setups if these buyers try to run this thing higher. I'd love to look for some short setups, specifically on the gold here. Get a nice little spot overhead to look for a nice reversal pattern off those highs. So S&P, got some problems to worry about. S&P is going to be a challenge. Not to worry, we're up for it. Oil and the gold are rotating, and we'll talk about where I want to buy these things and the patterns we'll use here in just a moment. Before we do that, though, let's make sure we check the news calendar for tomorrow. Tomorrow, of course, is a Thursday, right? That means jobs, right? That jobless claims report is the big news tomorrow at 8:30 Eastern time. There's really not much else, right? There's not much else that's going on out there tomorrow. We do still have the whiff of stimulus, right? We keep hearing about stimulus. So the more they talk about this stuff, the more the markets keep getting all pumped up, right? So be aware of that. That'll be something on our radar tomorrow, kind of a known unknown, right, for tomorrow. So we're talking about jobless claims at 8:30, and again, potentially another update on stimulus to kind of get things moving. Now, a heads up, there'll be no newsletter tomorrow night. Unfortunately, I'm going to be out of the office for most of the afternoon tomorrow. Not to worry, I'll be with you guys tomorrow morning in the trade room, but no newsletter tomorrow night, right? So tonight will be the last newsletter of the week. Monday is a holiday, keep that in mind, and so nothing on Monday. We'll come back and we'll do Tuesday for the rest of the week next week, all right? So jobless claims tomorrow. We'll be listening in for more chatter on stimulus. And again, I apologize, no newsletter tomorrow night. I'll be back after the holiday, right, on Tuesday with the next edition of our newsletter next Tuesday. Hope you guys, if I don't see you tomorrow morning in our trade room, 8 o'clock Eastern time, hope you have a fantastic Valentine's Day, a fantastic President's Day, right? Yeah, the holiday weekend coming up here. Monday is the holiday. And speaking of which, markets are open on Monday. There will be low volume though. So if you are trading on Monday, you know my opinion, right? If the schools are closed, if the banks are closed, if there's a parade, right? If there's a parade, maybe not, probably no parade right now because of COVID, right? But if there usually is a parade, you got to be careful trading the markets that day, right? So schools are closed, banks are closed, right? You just be careful on Monday morning if you're trading on Monday. Just remember though, the moves we see on a Monday holiday are oftentimes the appetizers for the moves we see the day after the holiday, Reaction Tuesday. So make sure you tune back in on Tuesday. We'll talk more about the plan after the holiday weekend. But for now, though, let's get back to our charts here and get ready for Thursday. I got Thursday and Friday to finish up the week here this week. So got the E-mini, got the oil, got the gold. Let's grab the E-mini first here. Jumping into the S&P 500 here. Now, like I mentioned, right, big momentum swing here on the S&P. Now, what's the most important takeaway right now on the E-mini? Well, we have this big market crash, right? Had the market struggle up top there, right, and crashed off of that high. They do a great job at taking out the weekend gap, right? That was the closing price from last Friday. We talked about that earlier on in the week. They collapsed off the high. They filled the weekend gap. And then what basically happened was the market kind of got into a range environment over lunch and then spits out the other end to complete what's called a pendulum swing. So we definitely have, right, we definitely have some concerns right now on this chart for tomorrow. We know the buyers want to retest these highs. That's obvious, right? The buyers want to get back to retest these highs. The buyers want to get up to complete that next objective at 39.42.5. But, the problem is this. The problem is we have very little space available up here, right? Not a lot of space up there, and that's going to mean there's one specific type of entry setup I want to look for, and that's traps, right? Traps are going to be our bread and butter as we go higher. Another thing we have to be thinking about is this big move down. Now, one thing we know about strong moves is they create what I call an open loop. So imagine a magnet right down here at that low. So there's a good chance these bears take this thing lower and then come back, or right, continue to go back down to those prior all-time highs. So those are the two kind of main components that when you look at this chart, you can easily see this may not be the easiest of days tomorrow on this S&P 500. If the market goes higher, we don't have much space. As the market goes lower, that momentum will begin to pick up, and we really got to be careful being a buyer on those lows. So let's put this plan together, knowing those are the two challenges, right? Let's put this plan together tonight. As we go higher, right? As we go higher, there are three types of buy setups I'm looking for as this market goes higher here tomorrow. The first one is going to be a trap. It'll be a move up. It'll be a shallow pullback. It'll be a higher high, and it'll be that trap low. I'm going to want that trap to be before I get back to retest those highs, right? So again, bull market going higher. They're going to want to retest those highs. I want to find a way in before we get up to retest the high. And because I'm concerned about location or amount of space up there, I'm going to use a trap setup. Traps are my go-to entry setup when I'm worried about buying too high or selling too low. Now, two types of breakout patterns. One would be a 1, 2, 3 breakout. Imagine now the market runs up. The bulls hold the pullback to the moving average and they jump off the EMA. Once we get that 1, 2, 3, we now know the buyers have blasted through those highs. The momentum that comes off the moving average is usually enough to give us one more leg. And so I'm going to look for an entry off the low of a new channel. Now notice how I draw the channel. I'm going to draw the channel backwards. I'll draw it off those highs and I'll bring it down off of that low. And remember, we always say in the trade room, the first test is the best test, right? I want to get that pullback off the low of that channel. Now, there's one more breakout pattern, and this one's going to require a real strong move. So let's say, for example, we don't just cruise our way higher, right? We launch going higher here. Could easily happen. We have a very jumpy market right now because of stimulus packages talk on Capitol Hill. So imagine the market runs, right? Big, strong run higher. We see a shallow pullback, a higher high in price, another great time to look for a trap setup as we go higher. Now remember, on these traps, I'm always trying to find ways to incorporate additional support levels on this stuff. So keep your eyes open for a new channel, again, drawn off the highs and then down to those lows. I would love to grab a trap off a prior swing low around that, right around the low of that channel. So keep your eyes open as the market runs higher for those three setups. Traps, 1, 2, 3 breakout, and a 2-try breakout. Now, what if we go sideways here? If we go sideways here, this now becomes a very important trading range right in the middle. So if we imagine now the market sitting sideways here for a while, we now have to be careful with this momentum move going lower. For example, if I want to be a seller and the market, right, I want to be a seller here, and the market, of course, breaks above the range tomorrow, what I have to be careful of is this momentum coming off of this low is going to be very bullish. And so for me to want to sell back into a range, right? Ranges act like magnets. If we do end up sitting sideways there, the only way I can get short is to look for a failure pattern. I'm going to want those buyers to try twice, though, in order for me to qualify that short going back down into that trading range. So again, if we get stuck going sideways here on the E-mini, I'm going to look for a failure pattern, because anytime we see a trading range, a range acts as a magnet. If we just cruise sideways around this 3,900 tomorrow morning, that will put a stamp of approval right on that trading range, and therefore what goes up, I want to sell it back down again. Now again, right, if we get that 1, 2, 3, then obviously that is not the case, right? But if it does go sideways and trade sideways, now we look for what we call failure patterns, right, coming off the high of that trading range. At the same time, if the market runs lower, right? Market runs lower now. The bears, they want to take out these lows. How do I buy this low, right? I'd love to buy this low. I got this range overhead acting as a magnet, right? The range acts as a magnet. I would love to buy this low. What's my problem, though? It's not location. Location is great. My problem is momentum. So if the market runs lower here, takes out those lows, finishes off, or should I say closes up that open loop, now, can I buy it going back up again? I definitely can, but in this situation, I'm going to want to use a failure pattern. I'm going to want these bears to try twice on this type of failure pattern, once and twice, and then I can buy into stop losses for that rally going back up into that trading range. And then don't forget to measure the amount below the range, above the range, and we can use that as a target, right? Target at the other side of the range, and target, of course, right on the pendulum swing. Now, if the market can hold the pullback down here, strong move down. If the market can hold a pullback down here and jump, that now breaks free of this range, this magnet, and now we can mark up that low, we can mark up that high, and I can look for a 1, 2, 3 breakout into a hidden channel pullback. Prior all-time highs is, you have to think it's a big magnet down there at 38.62 and a quarter. If you look even further down the line, you've got that big range down there, right? These big ranges down there. So if we do get another big bloodbath move lower, I'm definitely watching the prior all-time highs as an initial target. And then if it keeps bleeding tomorrow, 38.30 is a pretty darn good good objective for those long-term sellers. So as you can see, not going to be the easiest of sessions tomorrow on the S&P. What I'd love to do is get this thing up, get that trap, right, and buy that trap low, or get that 1, 2, 3 breakout, mark that high, mark that low, get long off the low. Another great setup would be coming down, right, finishing off that move down, using this range as a magnet, and then of course respecting momentum. Bears try once, bears try twice, and then simply running stops and buying right into those stop losses for that rotation back up into that range again, maybe a pendulum swing back up to retest those highs. Now, we're talking a lot about momentum today, right? A lot of momentum, and momentum is a good example, right? Because momentum plays into the fact that because we have all of that bearishness, that's why I let those bears try twice as part of that failure pattern. Now, there are lots of variations of these failure setups, and momentum plays a big role. If you want a deeper dive into all of my favorite pattern setups, I cover my 4 favorites along with hundreds of examples of how we apply those setups on our favorite markets. I cover all of that in our free trading course. So if you want a deeper dive into all the entry setups I'm talking about tonight, if you want to see examples of them and more of the rules I use in our trade room, definitely grab a little pop-up there in the upper right-hand corner, right? Learn the strategy, learn the setups, and that way tomorrow night, you come back and see me tomorrow night, you'll have that under your belt and you'll know what I'm talking about when I say a nested failure or a trap setup. You'll know what I'm talking about. All right, S&P is looking pretty good here for tomorrow. Next up here, how about some oil for Thursday's trading session? Looking at the oil market here tonight, we can see here on oil, what's the key takeaway right now? The bulls retested major highs, right? We had these major highs. I warned you about this level in last night's newsletter, 58.86. We had a bull market, of course, kind of go into a range, and the buyers, they did a pretty good job trying to push through these highs, but they were unable to break through them. Now, I would expect, because these buyers have been rejected a couple times, I would expect this market now to rotate back down again in search of some better prices, right? Buyers aren't seeing anybody buying up around these highs, and so naturally now we want to look for buys or long setups, if you will, at a lower price, right? So lower price will attract more buyers, or they'll break out and make a run up to this $60 a barrel area up there, right? A little bit overhead, right? So you got to think $60 is a pretty good magnet there for those bulls if this party goes higher here. So we know we're bullish. The buyers, though, have a big problem on their hands because they're not getting very far breaking through this major resistance overhead. So we assume they're going to want to buy a pullback, right? Buyers to buy those pullbacks down around the pendulum swing, down on the low of this channel. We also know bears, of course, right? Bears would love to short off the highs tomorrow, and bears would love to get a reversal and take out those lows from yesterday's trading session. So how do we trade this thing right now? Buyers have control, right? What if the market goes up? What if it goes down? What if it goes sideways here? If the market goes higher here, there are 2 breakout patterns I'm looking for as the market goes higher. One of them, of course, will be that 1, 2, 3 breakout. Remember, I don't want to trade into these highs here. So I'm going to want to see a strong move up. I'm going to want to see a pullback and a jump off that moving average. That'll be a 1, 2, 3 breakout pattern. I'm going to mark up those highs. I'm going to mark up those lows and look for that first test is always the best test off the low of that new hidden channel. The second breakout pattern is called that 2-try breakout, if you recall. That strong move up, that shallow pullback to the moving average, that higher high in price, and of course, that trap below that low. And as always, remember, I'm always looking for ways to incorporate those traps, right, off additional levels of support. So keep your eyes open for those hidden channels as the market runs higher. Can I sell this thing as it goes higher? I definitely can. We're at a major turning point. What I'd like to do is see these buyers take out those highs. Try once on the pullback, try twice on the pullback, and the key reversal pattern here is going to be what I call a crown reversal. Now we know the market is bullish right now, right? Not a bear market at all. So I have to respect the momentum of these buyers. And after they take out these highs, if they try once, lower low, try twice now, that's a great looking spot there to get short up around that trap high. Between you, me, and the wall, I like to always use that low, that high, and look for that combination of a channel with a trap high up there. Man, oh man, I love those reversal patterns coming off the highs. Again, I call them crown reversals. And of course, if we go lower, right, as we go lower, if we get stuck in the mud here, we're sitting on hands, right? We don't want to be trading inside the middle of this trading range. You'll notice I copied the amount of the move above the range to the amount of the move below the range. If we do end up swinging back down, I have some great support levels down here. Specifically, I really like this kind of hidden channel along with that pendulum swing. So if I had it my way, I'd be looking for buy setups off the low of that channel down around that pendulum swing. The only problem is, as you can imagine, by the time we get down there, this momentum swing will be so extreme. I'm going to have to give the bears the benefit of the doubt. I have to let them try at least twice, once and twice, before I can start to buy into those stop losses, right? One of my favorite setups when a market goes up and over, right, from a trading range is to look for what I call it's basically a failure pattern, but because there's two tries, right, I call it a nested failure or a failure inside of a failure. Now remember, a lot of times these types of moves, they're going to really spike and go higher, and a lot of times you'll see a follow-up trap entry after that nested, right, that nested failure pattern. So failure pattern into a trap pattern as we go back up to retest those highs. And again, I always like to measure the amount below, the amount above, and use that as an easy final target on that move. Now, as you can imagine, if we do get that roll over and go lower, I'm also considering a 1, 2, 3 reversal. If we can hold that pullback to the moving average, I can mark up that low, I can mark up that high, and again, first test is always the best test off the high of this channel. Where do we think the bears want to go? There's a lot of options here of where these bears would like to go. If I had to guess, I would guess probably back down into this range we had a few days ago, right? 57, let's call it 56.80 there. That'd be a pretty easy spot there for those bears to pin. At the very least, though, they definitely have their eyes on that 57.27 if we do get these bears in control here for tomorrow. So again, be careful buying high, right? Be careful buying high as we go higher here on the oil. What I'd like to do is wait for that 1, 2, 3 breakout and buy that, right? Buy that hidden channel on the way up to 60, or like I said earlier, go up and then 1, 2 trap high and short that sucker back down. If we rotate lower though, remember, respect momentum. Momentum is important here. 1 try for the bears, 2 try for the bears, and just punch right into those stop losses for an easy rally going back up. And again, if they hold that pullback and run, that's your sign. These bears have taken control. Mark the low, mark the high, and again, first test is always the best test. And remember, right, we're not just selling the top of that channel. A lot of times this will end up being a failure into pullback combination, and we'll talk more about that obviously tomorrow morning in the trade room. In fact, I cover that failure into pullback combination. I cover that in that free trading course. There'll be a link up there for you in the upper right hand corner. So now we know how to trade it long, we know how to trade the reversal, we know to stay away from the middle of this trading range. All right, let's keep this party going. Oil is ready for tomorrow. Shall we wrap things up here tonight on the yellow metal, on the gold futures? Boy, gold, of course, very similar to the to the oil market tonight, but a little bit different here. What happened on the gold here? Well, of course, yesterday evening we talked about this triangle, and we talked about how that the middle of that triangle be a magnet. And so you can see what's basically happened here. The market, of course, ran up, tried to break through that triangle top and failed miserably and came right back down into that triangle. Now, this is where that momentum swings, right? Imagine there is a kind of a pendulum, right? Hanging right in the middle. The market swings up. When the market swings back down, right, a lot of times it's going to keep on going, and it will complete that kind of pendulum swing, as we call it, in a very symmetrical way on the other side. So very, very big part of the plan here is going to be, hopefully, right, we'll get that pendulum swing all the way down to those lows. The buyers right now, buyers would love to buy a nice deep pullback, get underneath this range, use the range as a magnet. Buyers would also love to get a breakout running higher because, of course, they've got this 1878.6. That is the big time highs here. Not the all-time highs by any means, but a very, very significant top at 1878. That's where those buyers would love to get to for tomorrow. And if we keep hearing about stimulus, I would expect that major top to be a major objective for the buyers because, of course, more stimulus means higher prices on the gold. How about the bears, though? The bears would love to get short. Right? Bears would love to get short off of these highs. You can see I've kind of marked up that low, marked up this area. I've got this momentum running lower. I would love to see a short off of that battle zone for tomorrow. The bears could also take it lower and hold this thing and go take out those weekend gaps. Or if you look even further down, that big round number at 1800 would be an easy objective if the bears can get their hooks in this thing here for tomorrow. So let's play that up, down, and sideways game we always do so well here on this video. Let's talk about the upside here first. As the market runs higher here, I would love to get short, but the problem is we have a lot of bullishness in this market right now. What's the best way for me to sell short when I'm worried about momentum? It's going to be one of those failure patterns, but more importantly, it'll be a crown reversal variation of that failure, right? So one try for the bulls, two try for the bulls, and that trap high. Whenever I'm trying to go against the trend, I really want to give those buyers the benefit of the doubt, let them try twice, and if I'm going completely against the trend, I always want to make sure I'm doing it at a major turning point. Right? Always at a major turning point. We don't look for reversals in the middle of nowhere. And I like to get a trap. Trap is always going to be kind of the cherry on top there for that short off the high. Now, as you can imagine, as the market goes higher here, if the buyers could hold this thing and jump off the moving average. Now remember, as you can see in this one, a strong move higher is not a guaranteed breakout. So remember, it's got to go 1, 2, 3. Once it holds that pullback, now it's on. Now we can mark that high, we can mark that low, and remember, I want to buy the first test of the low of that channel. This could be a failure into a pullback, into a trap combination. Very, very common. We see these kind of combination setups, right? These failure setups, pullback setups, trap setups on the way up to where? On the way up to that, 1878.6 area as we go higher. Or if the market just takes off to the upside and just runs, that's your cue now to look for that shallow pullback, that higher high, and just grab that trap, right? Grab that trap. You know, I tell my clients all the time, when you see a market run like this, the first thing to do is what I always try to do is cut my position size down a bit. I'll tell you why in a second, right? When it really runs like that, cut your position size down a bit. Know where you're trying to go, right? We already know where the market's trying to go, and then look for shallow pullback traps. And the reason why I cut my position size down when I do that is because sometimes that first trap will pull back, stop you out, and you've got to be willing to do it again. So a little bit of a hint there for tomorrow's trading session if it does make that run higher, right? Sometimes you get that first trap, it goes up, comes back a little bit, stops you out, and you've got to have the ammunition left over to hit it again. That's why I always try to cut that position size down. And even though you're on a smaller position size at that point, because the move is so strong, your runner will usually make up for that smaller position. So it's a little bit easier way to get into it, right? So when you see those big, strong runaways, right, immediately recognize that momentum move, cut that position size in half or a quarter, figure out where they're trying to go. And that's why we always do this stuff, right? We think about, okay, if they break out higher, they're going there, break out lower, they're going down, right? We know where they're trying to go. And then it's all about look for that trap. And you want to be ready for two of those entries if you get stopped out on the first one. We'll talk more about that obviously tomorrow morning in our trade room, but a little bit of a clue there as far as how we'll be looking for it tomorrow as it goes higher. Now, if we sit inside the range here, just be careful, right? It's a magnet inside there. And if we continue going sideways tomorrow, right? If the market keeps on going sideways here tomorrow, not a lot changes. I won't need a crown reversal as much. I'll still wait for that move going up. I'll still wait for the buyers to try twice and sell back down again. I won't need that full crown reversal setup, but I will be looking for the buyers to try twice there just because of the overall bullishness in this market right now. And then obviously if the market runs lower, right? If that market runs lower here, what's my concern? Momentum. It's a great location. Right? I'm always remind you guys, right? You always want to ask that question, location and momentum. Usually one of these is the problem, right? So if the market runs lower like this, we know that range is a magnet. So I'm in a great location right now to buy it back up. So location's great, but momentum is the concern, right? Remember, check those two boxes. How's location? How is momentum? And that will usually keep you on the right track because, again, if I get that strong run down, great location, but momentum's a concern. So, of course, my job at this point now is to give the bears the benefit of the doubt. Let them try twice. Now, there's a lot of variations to this entry pattern. Like I mentioned earlier, right? I cover a lot of the variations in the free trading class. Sometimes you'll see the market. Sometimes the market will run down. It'll bounce hard and go back up. In those situations, I look for traps. So I'm buying nice and low, right? That's the same thing. 1, 2, and I'm looking for a trap to buy nice and low. Sometimes it'll roll over. It'll go 1 and then start to grind higher like that. In those scenarios, I'll draw a trend line off that low, off the high, off the low, and buy the trend line. Right? See that? Same idea, right? 1 try for the bears, 2 try for the bears, and again, you're buying off of, right? You're buying off of that support. So there's a couple different variations of that entry setup, but you do want to be thinking about seller failure patterns and literally giving them 2 tries and then buying right into those stop losses for that rally going back up again. Now, as you can probably imagine or assume, as this market goes lower, the bears have a reversal on a silver platter. All they have to do is just hold it and go, right? Now, I don't want to assume they have a reversal already. I'm not going to sell that first pullback, but I do know, though, right? We get that weekend gap below us, 1815, and that big range I mentioned earlier down around 1800 down there. So if they can get that strong move lower, and if they can hold that pullback and really blast right off that moving average, that becomes a bear market at that point. I'm going to mark that low. I'm going to mark that high. And again, first test is the best test off the high of that hidden channel. And remember, right, we're looking for off that high. I'm not just selling off the high, right? I'm looking for those failure patterns, pullbacks, trap patterns, right, on the way back down. And we'll talk more about those specific entry setups in the free trading course I mentioned earlier, along with right, in our trade room tomorrow morning. So now we have the plan ready for the gold, right? We know how to trade this thing as it goes up. We know how to trade it as it goes down. I wouldn't mind a breakout tomorrow going higher at all because you got that wide open space up there to 1878. But at the same time, though, I've got this nice hidden channel here. I really like the way this channel is lined up around these highs, lines up with that prior high. This would be a great spot for a crown reversal. We'll see if we can get it here tomorrow morning in the trade room. Speaking of which, right? Speaking of the trade room tomorrow morning, even though I will not be here with you guys tomorrow night, we will still be kicking butt together tomorrow morning and every morning at the opening bell. I would love to have you there right there with me. Getting started is really, really easy. I'll put the link you guys need to get registered for tomorrow morning's trade room. You got to be a member. I'll put all the membership links you need in the description of this YouTube video, so grab that link in the description. And as always, if you're on the blog right now, I'll put a big button for you right below this video on the trading blog. Don't be afraid to call the office. I'm always here to help, so don't be afraid to call the office and ask questions. I can also, of course, answer chat questions on live chat on the left and on the right. And I hope by now you've at least subscribed to our YouTube channel. Hope you hit that thumbs up button, right, if you enjoyed the video tonight. And if you have any questions, drop those questions in the comment section for you. But that's it for me here tonight and for this week. Have a fantastic fantastic day tomorrow. If I don't see you tomorrow morning in the trade room, enjoy your holiday break. Be careful over the holiday. Be safe. Make sure you come back in one piece on Tuesday as we get back to business here after President's Day on Monday. And again, if you are trying to trade on Monday, don't spend all your bullets on Monday, because we got Reaction Tuesday, the day after a holiday, is always where the best setups are going to be. We'll talk more about that next week. As always, keep in touch, though. You know where to reach me if you guys have any questions. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.